Hello and good morning, everybody, and welcome to the Institute of Hospitality CPD webinar, our last one of 2024. My name is Sam Corstock. I'm the Head of Professional Development here at the Institute of Hospitality and delighted to be joined by an expert panel today to talk about budgeting, forecast, cash flow for the hospitality industry. Before we start, just a few housekeeping items to run through. So please do ask some questions to the panel throughout the session today, and we'll get to as many of those as we can towards the end. There's an opportunity to ask those questions in the control panel on your screens. We'll aim to finish within the hour, and this hour can be used towards your CPD points. We require you to do a minimum of 30 hours of CPD a year, and this webinar can count towards those 30 hours. So please remember to record that in your members dashboard on the Institute's website. Today's webinar is being filmed and it will be added to our on-demand platform, so you can go back and refresh your memories at any time. So without further ado, let me introduce our panel, or let them get them to introduce themselves, I should say. What the panel will do is they'll just tell you a little bit about themselves, who they are and what they do, and to say why are they in to the Institute of Hospitality, why are they members. So I'm just going to go around the screen as I see it, and I'll start with you, please, Chris.
Good morning, everybody. My name is Chris Wardle from ERA Group. I have been in hospitality since 1985, came in through hotels, joined the Royal Air Force and was a catering officer for 21 years overseas in UK, and then joined ERA Group in 2012 and have been with them ever since. My role in ERA Group is chair of the hospitality group for the UK, and that purpose is to bring on more hospitality and leisure clients, and also to undertake projects on behalf of hospitality and leisure clients, whatever they may be. I'm a team of 100 in the UK, 1,000 worldwide, and yes, interesting times for hospitality. Thank you very much. Sorry, I joined the Institute back in 1991 as a student, and I've been a member ever since, been a fellow for 10 years. And the reason for joining, I mean, it is the blue ribboned organisation for our sector. I wouldn't consider joining anything else, and I get a lot out of it. And whatever you put in, you get out. And I found it very useful over the years for various different reasons.
Excellent, brilliant. Thank you, Chris. It's almost like we paid you to say that. So thank you very much. Great advert. Thank you. And Shabam, please.
Hi everyone, my name is Shubham Wankede. So I'm the sales manager for Crown Plaza London King's Cross Hotel, which is an IHG hotel. I've been a member of these hospitality groups when I was a master's student in 2020. So I've been with the institute since 4 years now. So I started to be as a member because I like institute to meet the like-minded people around me who are into the hospitality in the industry, so that I can be a network and grow my connection with them, and also to help and assist the other fellow members who are in the hospitality, like to do give some feedbacks and give the job opportunities within the industry. So that was the reason I'm in.
Excellent. Thank you very much. Thank you for joining us today. And Sana, please.
Hi there. Yes, so good morning, everyone. My name is Sana. I currently work in meetings and events for Accor. I've been in hospitality for a year and have been with the Institute for a year. And similarly to like Shubham, we've come from similar backgrounds, and I've joined because I really enjoy the world of hospitality and just being able to have the opportunity to network, meet other individuals across all sorts of levels in the industry. I think it's great, and not just in hotels like myself, but also those who work in like bars, restaurants, and even hotels abroad. It's just so amazing the amount of people I've met recently. But yeah, that's why I'm in.
Brilliant, excellent. Thank you very much. And Monica, please.
Yeah, good morning, everyone. My name is Monica Falana, and I'm a director of Reign Supreme Accountants. So my background always been in hospitality. So I studied 5 years A-levels at the Hotel Academy. general management of hotels and restaurants. And after moving to the UK, I worked for Whitbread Group in various positions in their various outlets for 14 years. So the reason why I decided to join the Institute was to share my experience and also being in touch with the hospitality industry as well. So yeah, that sums it up.
Excellent, brilliant. Thank you, Monica. And we're neighbours, actually, aren't we, Monica? You're just 2 minutes down the
Yes.
road from me here in
Yes.
Southeast London. So yeah, which is very rare because I've quite often feel quite lonely in this part of town. So it's nice to have another member near me. Excellent. So thank you very much, and thank you all for giving your time, not just today, but in the build up to today as well. So let's get on with the subject then today, which is all about money ultimately. So I'm just going to share our screens, my screen, so hopefully you can all see that now. So yeah, we're here today to discuss budgeting, forecasting, procurement and cash flow management. These are critical financial practices in the hospitality industry, helping businesses to plan, operate and grow effectively. Budgeting, forecasting, procurement and cash flow management are integrated and are critical for the financial health of hospitality businesses. By developing robust strategies in these areas, hospitality managers can make informed decisions, maximize profitability, and ensure sustainable growth. So we're going to start with just going through some of the very basics of this subject, and we're going to cover basically what is budgeting, what do we mean by forecast, what do we mean by cash flow management, and what is procurement, and then we'll get into some general talking points. So first we're going to talk about budgeting. So Sana, what is budgeting?
Yeah, so budgeting provides a financial plan or a spending plan, and this is based on your income or revenue. So basically, it estimates the amount of money you'll spend based on how much you make within a given period of time. So while some expenses need to be paid monthly, there are other one-time fees. So this budget will really help you to pay for those expenses as they do essentially arise. It also helps you to consider other expenses that do take precedence and which ones need to be paid first in terms of costs. And budgeting also really helps managers with allocating resources effectively and controlling costs. And then, yeah, so that is what is budgeting. I also wanted to highlight 3 different types of budgeting as well. So one of which is zero-based budgeting. So this is a budgeting process that allocates funding. This is based on program efficiency and necessity as opposed to budget history. And then as opposed to traditional budgeting, it's not like one item is automatically included in the next budget. So we have like programs and expenditure, and they're usually reviewed at the start of each budget cycle, and then they're reviewed and then just justified before the funding is then received. And then, yeah, this can be applied to any type of cost. So anything from capital expenditures, operating expenses, general and admin costs, and even variable distribution. So this method is actually really helpful in hospitality because of your variable costs like labour, food, and maintenance. And then the second type of budgeting I wanted to talk about is activity-based one. So this is a method whereby activities are thoroughly analysed to predict costs. So similarly to zero-based budgeting, it doesn't take into account of historical costs when you're creating your budget, but ultimately it helps like business owners, especially within the hospitality industry, to work on business cost drivers and enable them to maximize profitability as much as they can. Also within this type of budgeting, you can adjust your budget levels accordingly. So for example, within hotels, it could be like on levels of occupancy or the numbers of bookings or events that you have. So you can have like staffing and even food costs always fluctuating depending on the number of guests. And I can say that speaking from experience, when I'm planning events, the amount of times like last minute I can have somebody saying, like an event organizer saying, oh, I've got more guests coming, and they've got such and such a dietary, and yeah, you really have to really focus on the budget, keep a track of it, and then let the client know after the event. But that's just an example of that. And then lastly, seasonal budgeting. So this is when you're looking at your existing budget and you're making allowances for what you'll need. So it allows you to get your business ready and what you need to know what you're going to be spending more on over the coming months. And I mean, as we all know, we're all in the hospitality industry, and many businesses can be affected by seasonality. So it's basically looking at separate budgets for like peak seasons. So this could be, for example, in the events industry, like I work in, from September up until December, that's like technically a peak season, and then you've got off-peak seasons like in the summer. So budgeting here really helps to plan for like the different levels of revenue and expenditure. Also, this does correlate with things like climates and holiday periods, major cultural events. So these like metrics, they can really have an impact on a business's profitability, but it does help business owners, also those in hospitality, to prepare for what's coming in the upcoming year's budget. And then a third point I'd like to touch upon is the budgeting process. So this is actually quite a systematic approach. It requires quite careful planning and execution. And usually I look at 6 steps when planning a budget. One is collecting data. So you begin by collecting data from previous years. So for me, working within hotels, it would be looking at things like room occupancy rates, your ADRs, which is basically average daily rates, and even your RevPARs, which is revenue per available room. You could also look at other data like customer satisfaction scores, online reviews, and feedback as well, and that really helps you to understand where areas may require further investment. Also, it's good to establish goals as well. So for myself, I usually set SMART goals, so specific, measurable, achievable, realistic, and time-specific goals for myself if I'm looking at anticipating budgets for an upcoming year. And another example of this is like I could increase my revenue by 10%, but then decrease my energy consumption by 15%. So I like to ensure that each goal does align with the strategy that I'm working towards. Also, revenue forecasting. I know forecasting is something that Shubham will be discussing with you, but I just wanted to touch upon it lightly, that I usually work with forecasts as well, and you can look at these either by month or quarter by quarter, and then it's broken down in that way. And it's based on looking at historical data, any market trends, any planned marketing and sales initiatives. And sometimes it can be really difficult to predict revenue, so having effective revenue management is really key when creating a budget, especially within hotels as well. Allocating resources as well, so identifying key operational areas that do require investment. So you can break down your allocation into subcategories like marketing, for example. So you can break it down, marketing, into SEOs, and then PPCs, and then social media. So that's another step. Also, you really have to monitor and adjust your budgets. We all know that budgets aren't really static documents. There's always something ongoing, something always changing. So it's always good to conduct quarterly or monthly reviews to be able to assess the performance of a business against the set goals that are in place. So, for example, if you're going along the way and you can see that certain strategies aren't working, they're not reaching those expected results, then resources can be then reallocated as you go along. And then finally, you can just finalize and implement the budget, essentially. So once all the adjustments have been made, the budget is then finalized, and then it's distributed. For example, within hotels, it would be to the relevant heads of departments, and then they can implement it within their respective departments in the hotel. So in that way, everyone has an understanding of their budgetary responsibilities and performance metrics as well. And then there are factors which do influence budgeting, so I'll just list them because I'm just conscious of time. So there are internal factors and external factors. So internal factors could include occupancy rates, revenue metrics, cost management, staffing levels, maintenance and upgrades, any plans on expansions which are quite exciting, any marketing or sales campaigns, which include strategies as well. And then you've got external factors, so things like market conditions, your economic trends, looking at competition, who your competitors are, how they're performing as well. Also travel and tourism trends, so looking at traveller trends and global traveller trends as well to see how they're, spending their money, if they like to pick certain destinations and places like that. And then also looking at things like seasonality, which I've touched upon. So even there are different events taking place throughout the year, like local events and festivals. So that can sometimes boost your demand. And it's something that should really be considered within revenue projections. Also technological advancements, like commercial software and operational technologies like mobile check-ins at hotels, which you can use on your apps on the phones. That's something external. And then, yeah, the pros and cons of budgeting. So again, I'll just list them again. So there are some advantages to budgeting. It really helps with planning and control. So you can really plan ahead and identify any potential financial issues as and when they arise. You can also monitor the performance as well. It really helps you to achieve your goals as a business, or for me, within a hotel. It also helps with better resource allocation, so it helps to avoid overspending money, knowing where you're going to spend money and maximising profits, and also avoiding, spending too much in that way. It's really great for forecasting, great for decision making as well, and benchmarking, as well as financial performance reporting and financial reporting. And essentially it does help with increasing profitability by assessing that financial performance and seeing what you can do to enhance things. And then some of the disadvantages are it can be quite rigid, quite inflexible. Sometimes budgets don't allow for unexpected decisions in unforeseen circumstances. So sometimes there could be missed out opportunities, or maybe the resources may not be allocated as efficiently. Also, budgets can be quite time consuming in the amount of time it takes to do it, as well as juggling and balancing your other tasks as well. Sometimes they can be a little bit unrealistic because it can cause stress and burnout, but that's where you have to really be realistic with the goals that you're setting and the targets. Also, it can be a little complex at times. It may not reflect reality. So also I find budgeting really does help with short-term thinking, but sometimes I find it can sometimes hinder that long-term thinking for financial sustainability. But yeah, those are my takes there on the pros and cons of budgeting. And yeah, that's my part on budgeting. Thank you.
Thank you very much. Really comprehensive overview and a good way to start this session, definitely. Just one point I think is probably worth noting, that every company has a different budgeting year, don't they? So most companies do their budgets from April to March, but that's can be different to different organisations. I know here at the Institute, for example, our budgeting year is calendar, so it runs from January to December. But I've worked in other businesses and they follow the academic year, so starts in September, ends in August. So that can be just bearing in mind as well that nobody's budget year is the same, is it?
Of course, yeah, it does vary. It is different. For me, it's starting off in October, so yeah, it does vary within different hotels. I mean, for me, hotels, but of course within other hospitality sectors it can be different.
Yeah. Perfect, excellent. Thank you very much. So now we're going to move on to forecasting, and I'm going to hand over to Shabam, please.
Thank you, Sam, and thank you, Sana. It was very informative information about the budgeting. Very well said. So as I'm going to talk about the forecasting which is required in hospitality. So forecasting is very important. Forecasting is what it means. That's what I'm gonna say now. So it's about the predicting the future demand, revenue, and the occupancy rate, which is based on the seasonality, the events happening, and the economic conditions, which we analyze by gathering the data from past, current, and the future. So that is what the forecasting means. So I'm also going to talk about the importance of the forecasting in the hospitality industry. It is used mostly for operating and planning the staffing and resource management. Forecasting is critical in the industry for managing resources efficiently, optimizing the revenue, and enhancing guest experiences. Also, forecasting helps anticipating the demand in fluctuation due to the factors such as seasonality, events, and economic condition, which I already mentioned. So there are different types of forecasting. Basically, this is short-term forecasting, and the other one is a long-term. So when we say short-term, which helps in day-to-day operations, like how to do the staff scheduling and how to do the inventory management, which helps in hospitality basically. And the long-term, which involves a strategic decision-making, such as for expansion plan, marketing, and also to budget allocation for the next years and the coming future. So nowadays, when we say about forecasting, it's not about the blank heads. It's about all the data-driven approaches, which we taken care of. So leveraging the data from the historical occupancy rate, getting the guest feedbacks from the booking patterns, and also the external data like weather, local, create accurate forecast for the next years. We also use the modern technology nowadays, which is an AI and data learning machine tools. Also, we have to be very careful about to check about our competitor analysis, where what our competitors are charging, what if they have any renovations or anything which is going to affect their business and which can help our business as well in future, in such as for the bedrooms and such as for the M&E as well. So we have to also take care of the forecasting the competitor analysis. Also, there is a demand forecasting by segments, because in hotel there are different types of segments which comes case from leisure, corporate, business groups, and M&E, which is meetings and events, etc. So forecast demand based each segment needs and adjust rates according to the packages. So also we use the forecasting tools, which is called as revenue management tool. We use it for the dynamic pricing so that we can have a maximized occupancy and the revenue in the industry. So what are the benefits of the forecasting? To make improved decision making leading to optimized staffing and resource allocation, financial benefits through improved forecasting, revenue management, and minimize the waste. So this is all the importance of the forecasting, and that is what I wanted to share with you all at the moment.
Thank you, Shabam. Thank you for that really good overview of the forecasting. So much appreciated. Let's move on then to cash flow and cash flow management. And I'm going to hand over to Monica for this section.
Thank you very much. So cash flow management can be defined as monitoring, analyzing, and adjusting the cash flow of a business. A very profitable business can experience extreme cash flow problems, just as an unprofitable business can survive if it's well funded. So one of the most educational sessions we do with our clients is to understand what's the difference between cash flow and profit. So cash flow shows how much money moves in and out of your business, while profit illustrates how much money is left over after you have paid all your expenses. As Shaban mentioned, forecasting, one of the main document you should be using in your business, aside from budget, is actually cash flow forecast. And that cash flow forecast can be short term, which is usually based on 30 days, or long term, and that's 12 months. And cash flow forecast estimates the expected flow of cash coming in and out of your business across all areas over a given period of time. And your cash flow forecast should be a fluid document, and the minimal review should be monthly. However, it's really advisable that you review your cash flow or cash flow forecast on weekly basis. And if you are in quite fast pacing business, then you can even do it daily, which I know it's a lot to ask, but it's important. There are different ways of helping how to manage your cash flow or understand it. One of them is called the Business 101 cycle, and another one is called the cash conversion cycle. So the Business 101 cycle is a great tool to help understand the difference between profit and cash flow. And the first step in the cycle for you as owners is to invest money into the business to purchase asset. You might need additional finance to help fund these. Then when you use the asset to generate a profit, to increase profit, you could increase sales or improve your margins. On the other hand, drains on profit can include unchecked overheads, expenses, and wastage, and that's where the cash flow forecast comes in. You then turn that profit into cash. Drains on cash include the slow collection from debtors, which in hospitality doesn't tend to happen that often, increase in stock or work in progress, loan repayments, tax payments, the dreaded tax, and faster payments of suppliers. So to improve the amount of cash you have, you can collect your debtors faster, decrease your stock, which is one big thing in hospitality businesses, or negotiate longer payment terms with suppliers, which I'm sure Chris might wade into that. Reduce tax payable if possible, and refinance loans. You then decide how much of that cash you want to take out of the business for your personal expenditure. So when we talk about businesses, especially if you're a smaller business such as a restaurant of its own, so you are not a big hotel chain, make sure that when you look at cash flow and cash flow forecast, you give yourself and your team the rewards they need. So it's all accounted for. And then the balance that is available to invest in the business. So the goal is to accelerate this cycle as fast as you can improve your return on investment. Now you're thinking, oh my God, this sounds complicated. It's actually not. It's quite easy tool to use. So if you would be interested, it's called the Business 101 cycle, and it certainly might help your cash flow. The other one, it's called the cash conversion cycle, as I mentioned before. And it's generally calculating, especially in the hospitality business. You buy the stock from supplier, and then you usually have until the end of the following month to pay for it. So let's say that it's an average of 35 days from when you buy to when you pay for it. So generally, you don't tend to get offered finance, especially if you are a smaller business. If you are a big hotel chain, it's a different story. The cash is received at the time the sale is made. So if it takes an average, it can take average 65 days to sell the stock from when you bought it from the supplier. So to calculate the cash conversion cycle, you take away the 35 days credit provided by the supplier from the average stock holding. So the cash conversion cycle in this example is 30 days. So if your sales are about, let's say, 500,000, just to make it simply, you then manage to if you manage to negotiate longer payment terms with the suppliers, you can have an average of 45 days to pay instead of 35 days. And then it frees up about 14,000 pounds in cash. And that cash which you free up helps to run your business on monthly basis. So there are different tools which you can use to improve your cash flow, but it also shows you how important it is. So there are 7 causes, or we always talk about 7 causes of poor cash flow. So I'll just list them for you. So the first is your accounts receivable process. If this process is inadequate, your debtor days will be too high. And in other words, it will take longer to receive payments from customers. The second is your accounts payable process. A poor process could cause you to make payments late, leading to penalties or missing prompt payment discounts. And we all know that, for example, the HMRC, they became very rigid, especially with the small businesses, and you're receiving penalty letters, and they are very quick to charge interest on VAT payments as well when they are late. So that's something to be aware of, that your process needs to be, streamlined and seamless. The third is your inventory process. If you carry stock or work in progress for too long, your cash will be tied up for much longer. And we know how many times, especially in my auditing days, used to walk into cellar or storage, and oh my God, all that stock sitting there because you worried you always run out or you might run out. And then it goes out of date and it goes to wastage. The fourth is having an appropriate debt capital structure, causing unnecessarily high interest charges, especially be aware of the HMRC. The fifth is having overheads which are too high. They should be reviewed at least annually, and with the smaller businesses, they should be reviewed actually monthly. The sixth is having a low gross profit margin, and that is what's left from sales after variable costs are deducted. You don't necessarily need to increase your prices to increase your gross profit margin. And the final cause is sales levels being too low to support overheads and other cash demands on your business. So if this is the case, your business is not currently viable, and then it is essential that you work to improve your sales levels. Now, one of the things we come across in our business is that in the hospitality businesses, we don't tend to include the team in different levels, or not communication, understanding why upsell is important, also explaining how much profit margin you make on one extra glass of wine or one extra sell of fries or a sides dish. And that is very important that the team understands that if the business will do well, they will do well. There are different ways of how to incite the team to be part of the business, and explaining the reasons for it. That is very important. Just saying, oh, we're not making enough money, many times is not good enough. It needs to be taken from a positive aspect and involve them. Even though it's hard work, I understand that, but you need a positive attitude to keep your cash flow flowing. Do I still have time to go through some other ways of how to grow the business with regards to cash flow? Sam, is that okay?
Can we come back to that, Monica? Just hold that thought, and then
Yep.
we'll come back to growing the business in a bit. But just want to thank you very much. That was really, really useful. And again, I think it's one of those terms that gets used a lot in businesses. It gets bandied about, got to watch our cash flow and cash flow this, cash flow that, and not many people actually understand what that means. So you've explained that really well for us. So thank you, Monica.
Welcome.
We'll come back to about growing the business in a minute, though. So hold that thought, and I'll come back to you. But I just want to I want to come on to Chris now to talk about procurement, and I guess this is something that again is another one of those terms that we hear get used in business quite a lot, but probably not a lot of us really understand what that actually means. So yeah, over to you, Chris, to shed some light on this area for us, please.
Thank you. Please do pull the bullet lines up. There we are. Okay, so You know, our hospitality and leisure industry, it's a broad church. It's not just hotels and restaurant chains, it's cinemas, it's theatres, it's sports grounds, it's holiday resorts. You know, it applies equally for all of them. And I think going through, you know, with a golden thread from the three speakers before me and my part, you know, it's budgeting, forecasting, cash flow management, and procurement. And procurement is important. And my whole section can be summed up by saying this: buying the best better. Okay, that's it. That's all it happens to be. And I'll give some top tips at the end of this. But looking at these bullet points in turn, you know, number one, everybody tends to focus on revenue, which is fine. If you bring in 100,000 of extra revenue, but it costs you 90,000 to discharge that new business, fine. If you can take 100,000 out of your bottom line, that's straight off your bottom line. And going back to what other speakers have said about cash flow and impact on the business, that can make an enormous impact on the business. So don't, you know, I would always say start at your bottom line to be more profitable, to be a better, more viable business. You know, if you need to make efficiencies, which, you know, many businesses do, you know, what can you look at to start to nibble away at without reducing service or quality? This is not a slash, or it should not be a slash and burn exercise. You know, focus on your bottom line before you start looking at your client-facing activity. And let's take a typical business, hospitality. You know, 60% of cost of staff, 20% F&B, 10% overheads. That only leaves 10%, if you're lucky, for profit. Now, it only takes a shift in any one of those three areas by 3% to be more expensive, and you've wiped your profit out. That's why I say you should look at your bottom line just as much as you look at your top line. And it's an area that's often neglected. It can be a bit same old, same old. I see a lot of really good practice in procurement, and I see a lot of really bad practice. But the one common factor in all of it is, because people tend to operate in silos, they think what they're doing is pretty much good. So the second part is, you know, procurement does take an awful lot of your funding within your business and commits it. How is it controlled? Do you have a common champion that looks after your F&B, or that looks after your in-room janitorial spend, or that looks after your, you know, your facilities management? You know, what is the plan? What data do you collect? Do you get it from suppliers? Do you collect it yourself? And what do you do with that data to interpret it, to make some management information decisions? And ask yourself the question, what is this costing us? You know, do you just accept that it goes up 5% a year, 7.5%, 3.5% every 1st of January? And I'll come back onto that point a bit later. It's a huge part of your organizational funding, and it needs to be controlled. And that sounds like a no-brainer, but you would be surprised the amount of people who, through the nature of perhaps devolved budgeting, where people are made responsible for part of the ship, that's not pulled together at a high level, and therefore the leverage that some businesses should be getting for what they are buying, given their size, is not realized. Number three, use and interpret your data. I've said, you know, there's plenty of data flying about the place, but it needs a skilled interpreter to make any sense of it, to make use of what you're doing with it. And we're trying to, of course, to make sometimes the subjective as objective as possible, but you've got to start somewhere. Take a longer term view. I meet too many people who are spot buying what they're doing and saving, you know, single digit percentages on a daily or weekly or monthly basis, rather than taking that long-term view and reducing that spend and allowing those people who perhaps aren't in financial positions to do the job that they were employed to do, rather than spending time on the phone playing one supplier off against another. What's your procurement policy like? I would add into that. You know, I still meet people every day of the week who tell me they get 3 quotes and go with the cheapest one. That's fine and dandy, but if you're talking to the 3 most expensive suppliers in central London with the worst service and you choose the best, you've still not got the best solution. Start with the big ticket items. You could probably save money on your flower spend. It probably wouldn't be very strategic. So look at obviously the big ticket spend, the F&B, I would say to start with, your telecoms, your technology, you manage print, your energy, you know, these are kind of areas where you need to focus on. To make any difference. And it's not about reducing, as I said at the start, but I'll say it again, service and quality. It's finding that well-formed solution that represents proper value for money. And there can be some enormous changes in that. And everybody's skeptical, but actually when something comes back having been properly reviewed with a market test, there can be some really, really different prices on offer, and a lot of the time from their own incumbent suppliers. And the last point on me leading into that is speak with your suppliers. I'm always shocked by how little this happens across the board. You know, there might be some innovative way of doing something or some new products on the market that you just don't know about because you don't give your suppliers the opportunity to speak to you. And let's face it, we're nothing without good suppliers. This is not a process in beating suppliers over the head. This is trying to play to their strengths and to what you require and dovetail the two together. Sounds a bit cliche, but in 12 years, I've come across many, many hospitality businesses who are with the right supplier, but don't press them often enough, who are completely with the wrong supplier and need to change. But without a little bit, sometimes, of external help, it's quite hard to work out which camp you fall into. So what would I say? Yeah, that inertia of incumbency is something, you know, if you've been with somebody 25 years, that's fine and they will do a good job for you. But I think every now and then you do need to shake the tree and see what else there is available to you. So my top tips to you to finish off, review your purchase ledger. Where your big ticket spends, what are you doing? Is it going up every year? What's the service like? Dig out your contracts. People just don't seem to have an idea where some of these contracts are. They were sorted 3-4 years ago. Those people have moved on and they've taken that corporate knowledge with them. What are you committed to? Don't force yourself into a rollover position. Review how you measure performance, not just on cost, but you know, are these people meeting the quality and service that you want? And if not, are you telling them? And if not, then there needs to be that line of communication with people. All sounds very simple, but it doesn't happen as often as you think it would do. When was it last looked at? You know, some people look at the same areas of spend over and over again because they're comfortable with them, which is fine. But when the big ticket stuff comes in on a 5-year renewal, how do you start putting the process in motion to review that adequately? And finally, I would say, get your stakeholder view. You know, it might be the biggest kept secret on the shop floor that your supplier of, I don't know, certain elements of F&B is poor and doesn't deliver when you say, or your janitorial offer is not up to standard and guests complain, or your cleaning, if you have a third-party cleaning contract, you know, it's not done to the level you want it to do. Speak to your stakeholders. They will tell you where they think they should be, where you should be looking at. But it isn't rocket science. You know, it just needs a comprehensive view, and having done this for a long time, there can be some astonishing results. Okay, not necessarily being an agent for change, but I've seen people save 75% on mobiles. I've seen them save 70% on an insurance premium, and a lot of the time staying with their incumbent supplier, but just asking the question slightly differently. Thank you.
Brilliant. Thank you, Chris. I think a lot of that we can take into our personal lives as well, couldn't we? I mean, saving 75% on your mobile phone bill sounds quite attractive, actually. So, yeah, thank you very much, Chris. I think that's really, really helpful. So I'm just going to stop sharing now my screen now. Thank you, guys. I think that's a really good introduction into the subject, and we've got about 20 minutes left. So I just want to have a bit of more of a general chat now, if that's okay. So, Monica, you talked about business growth, and I think that's on the tip of everybody's tongue at the moment. And, you know, there's lots of costs coming down the line. There's increasing national insurance on business, and we don't want to get down into that much detail. We covered that quite extensively last week following the budget, but growing the business is one way out of it, isn't it? As well as what Chris was talking about, is trying to cut your costs and get the best deals you can. How can you use the cash you've got in your bank to help grow your business then?
So if there are different ways of obviously investing. So if you have cash in the bank, you should split it where you have always something in a savings account. So you save that for rainy days. And then with the rest, if you are a business where you have that luxury of having the extra cash in the bank account, then you can look at different ways of investing, or you can actually help startup businesses as well, where the company actually has an agreement, a lending agreement and that way you're getting your interest payments, but it helps with reducing the tax bill. So that way the money is not just sitting in the bank account, it's actually working for you to a certain way. But there are other ways, obviously, to grow the business. So we always encourage that you look at the customer retention. That's one of the biggest issues you have, and even in the hospitality businesses, whether it's a business where offering accommodation and you get the same people coming every year, retention is a biggest problem, as Chris mentioned. There are different aspects, even cleaning. You walk in a hotel, the cleaning is not up to standards, you don't come back. So the customer retention rate is very important. Generating more leads. So I mean, times are tough, as we all know, and the first thing when we're looking at streamlining is clients always look at marketing first, and that should be always the last. As Chris mentioned, you're looking at not having the flowers delivery, which has a minimal impact, whereas you're not looking at the big ticket items, as he called it. So marketing is one of them. You need to generate more leads, which will drive more potential customers to your business. Then increasing a transaction value or getting the customers to spend more money. I think that's one of the biggest challenges we have, because many of us, we have team members, and I kind of mentioned this before, where you need to engage your teams so then they drive that spend per head. And one of the main aspects I always encourage is to understand how many heads need to have for, let's say, breakfast, lunch, or dinner. And the team should understand how many people does it take to cover their wages, to cover the cost. So just engagement with the team, and reducing the cost of sales by driving efficiency, which Chris obviously covered that. So identifying time and resourcing savings, and that will enable to sell more. And I like the way Chris talked about the big ticket items. I think those are the biggest items we don't really look at, because who wants to be holding for hours with a, let's say, energy company and trying to get the biggest deal? So get professionals. I think that is the main message. Get a professional. There are different professionals to help you, whether it's with budgeting or forecasting, or even with procurement. Professional will help you to speak to the right people, and save you money in the long term. You might think, oh, I have to pay them. Well, maybe so, but don't see it as an expense. See it as an investment, because in the long term, they will save you money and help your business grow.
Excellent, brilliant. Thank you, Monica. Can I just ask and anybody pick this up about a couple of things. First thing around dynamic pricing strategies. So we hear a lot about this in the news, especially with recent concerts that have gone on sale, and how that applies to the hospitality industry, but also financial software. So what should we be using? Excel spreadsheets, or should we be using something a little bit more sophisticated? So who wants to pick up dynamic pricing?
So basically, I can help you out with this one, because as we use the revenue management system, we use that for dynamic pricing to adjust the room rates, so that based on demand, helping to maximize an occupancy and the revenue, which helps the RMH. So basically, it's a software tool which helps to predict the demand and the customer behavior to maximize our profit.
Okay, excellent. So basically, the more busy you are, the more expensive the rooms become. Is that not like the general rule of thumb with it? Yeah, excellent, excellent. And what about Sana, about financial software. What do you use at Accor, and are there other products out there that you use?
Yeah, so I predominantly use Excel spreadsheets. I do work with forecasts and things like that, and I've worked on spreadsheets with different columns there, like different factors that I touched upon, and you can even see like how pricing is going to affect like the prices of rooms. It depends on the season, the demand, for example. If there was like a royal occasion, like the prices would go up, and things like that. Otherwise, in terms of software, I use a system called Delphi, which is part of Salesforce, and I can use that to pull things like reports as well. So I can see, the different times as to when the hotel tends to be busier and things like that. And you can do it like month by month or year by year. Even with events, I work with an events calendar, and it's on Delphi, and you can see as well as to how busy things are going to get. So yeah, just many different software platforms.
Okay, excellent.
Can I just
Go on,
add
Monica.
that
Yep.
there's having a good accounting software. It has its weight in gold, because number of accounting software, they have integration with the different sales platforms as well, and that might save you time. I know some people love to work with Excel, but if you are not that skilled, for example myself, using accounting software, you can use that for budgeting, also forecasting, and you deal with the real-time information, which helps you to make quick decisions rather than months down the line. It's really, really valuable, and there are different training programs. So don't stop yourself from thinking, oh, my technical skills are not great for Excel, because I know how you feel, but there are different options you can use. So it's not just about Excel spreadsheets. There are different, as I said, software you can use to help you to grow and better the business.
Excellent, brilliant. Thank you, Monica. And I guess, Chris, you can help procure them.
Yeah, it's not, like I said, it's not rocket science. It's just getting the data and doing something with it. Who owns it? When was it last renewed? Where's the contracts? When did we last talk to the supplier? I'd also say it needs to be top down as well. I would really encourage boards to make procurement an agenda item, at least every now and then, to discuss what is going on. They will bring people in for a big IT project, but what is going on with procurement? Is this going up? Is it going down? Is it staying the same? Has service gone downhill? How many different suppliers have we got? When I look at the tail of purchase ledgers, it's always the Pareto rules that apply. It's the top 20% you spend 80% of your budget with. What are you doing with the other people? How do people actually commit to your organization to be liable? How do they order? Do they get a reference or a purchase order number from your SAP system or your ERP system, or are they free rein to do their own thing? I've come across large hotels with 20% of their kind of outgoings almost held in petty cash. No visibility or control over it. And why are people buying from Amazon or doing their travel through Expedia? You've got to control those controllables. It all needs reining in, and somebody needs to be made responsible for it, to have sight of it and to manage it.
Agreed. We've got a question here that's coming from our listeners, asking about managing seasonality, and I guess this is aimed at you there, Chris. But how different seasons can affect budgets, labour costs, food costs, etc. What would you say to
I would
that?
always take an annual view. Yes, taking into account the fact that seasonality exists massively in our business and menus change, food costs change, but you've got to take the longer term view. You've got to recognise the fact that you are going to pay more for some foodstuffs, for example, at certain times of the year, and that's built into your GPP. I think my biggest bugbear is people not taking the bigger view. It's always a reactive response, and I think if you can start at the start of the financial year with a budget based on reality, and then control it going through the year, then fine. If you need to take stuff off your menu items because you can't afford them within your GPP, then so be it. If you need to raise prices, then so be it. But really, you need to have everything as nailed down as possible through your own practices so that you have no surprises.
Excellent. Whilst you're there, Chris, I have another question that's coming from Yvonne. She's saying, do you recommending putting aside a budget for employer branding to attract talent? If yes, any benchmarks? And she says, thank you, Chris, for your insightful procurement tips.
Thank you. I mean, marketing isn't really my area of expertise, other than to say it's hugely subjective, it's hugely emotional, and there's lots of stakeholders who have their own views on it. What we are doing, well, what I've been involved in has been benchmarking third-party marketing agencies, if that's the way that you're going, rather than doing internally, and there's huge deviation between different providers. I don't know if anybody else has got anything more intelligent to say than I on this one.
Well, you mean
Anybody?
marketing?
Well,
Yes.
more like employer branding to attract talent. So it's like a recruitment budget, I guess.
Yeah, it is worth to put that in a budget, because you know, employee retention, it is quite a big issue in the industry, and attracting the right talent is even a bigger issue, which I can see Shaban is nodding his head a bit, agreeing. So to attract talent, you do need to account for that investment. So in a short answer would be yes. It will be valuable to keep that as a part of a budget. Yes.
I mean, as a business decision, you know, you've got to keep hold of your people. You've got to attract, retain the right people, and keep them, make them empowered, train them as you go through their whole career, and keep hold of them. Otherwise, they will vote with their feet. Given the cost it is to hospitality businesses, you'd be crazy not to have a far more proactive view of doing that. I was in a restaurant last week in Birmingham, and as a young girl there, bless her, student, on her first night, and she was left to run front of house. You can't do that. She's not going to stay there long enough. More supervision. And I'm not saying that as a generalization. I'm just saying it is inherent in our industry with the exodus of staff that we've had over the last 5 years, 4 years. You need to keep hold of the people you have. But yes, you're absolutely right. You've got to attract those people in. It's about contracts, it's about working conditions, and it's about giving them responsibility early and making them feel valued. None of this is a surprise, but not everybody does it particularly well.
I think the main is that everyone always look to cut down staff hours, sending them home, in accommodation, finding cheaper cleaners, but you need to look at what impact it has on your service and the delivery of the service.
Excellent. Okay, we've got time to squeeze in one last question. This is from Saeed. He asks, we've been hearing lots about the USALI, so the Uniform System for Accounting for the Lodging Industry. Anybody heard of that on this call? Yeah, okay, we'll carry on. How is this different from the conventional system of accounting? Can anybody answer that, or is answers on a postcard for that one? Anybody heard of the USALI?
No. Interestingly, no.
Okay.
It will be interesting to find out where it comes from. So I'm just putting it. I'm taking a note right now.
There you go. Well, we'll put you, Monica, in touch with Saeed after this, and then you can carry on that conversation out here. So it's the Uniform System for Accounting for the Lodging Industry. So there we go. Okay, well, we've all learned something new today, which is great, and that brings us nicely on to the end of our webinar, end of our hour we have here today. So it's just left for me to say a big thank you to the panel today for all your time, for all your input and sharing your expertise. It's been great working with you both today and leading up to today to get prepared for this webinar. Thank you to everybody for joining us. and leaving us with lots of questions and things to ponder. So thank you for sending those in to us as well. Remember to use this last hour as a record, add it to your CPD record on your members dashboard and put a reflective account on there of why what you've learned from today. And we will see you for our next series of webinars in 2025. We have now published our calendar of events for next year, so you can download that from the website, or if you are an individual member, that would have come through the post to you in the last couple of weeks as part of your renewal. Hopefully you'll be renewing with us before Christmas. So wish you all a very nice rest of today, and we look forward to seeing you again soon. Take care. Bye-bye.
Thank you.
Bye. Thank you.